Hello, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. Thank you so much for tuning in to this Facebook Live and also YouTube live stream. All right. Before I kickstart, okay, just say a good night to my girl, my daughter, Janie. Okay, go and sleep. Okay, good night. And yeah, and if you can hear me loud and clear, please say a hi to me in the comments in the chat box. Okay, on YouTube. Okay, everywhere. Okay, Facebook, YouTube, these two only. Actually, in fact, these two only. Okay, say a hi to me. Okay, I really love to hear and see your comments. Give me a like, share, and comments, and let YouTube and Facebook algo spread the live stream around. Okay, so I really appreciate that. Okay, let me take a look at the comments right now. Hello, Kelvin. Hello, Tian Ling. Hello, Mary. Pei Wen, Wee Ling, Dave, Melvin, Stephen, Wai Lam, Victor, Elaine, Mike, okay, Wing Kwong, okay, Lele, Chinese hits from YouTube, Geraldine, Hadley, okay, Chris Chow, CH, thank you so much. Hi, Jia Ba Bui, Jia Ba Liao La, so late already, supper already. Hello, Jean, okay. All right, so let's kickstart today's session. Today my hair like 一点不听话 like can see the stray end here. Okay, never mind. All right, so please give me a like, share, and comments if you could. I really appreciate that. Okay, just take you 1 second and you'll do. And if you're watching this on YouTube, please give me a follow and subscribe to our channel as well. Hello, Christina. So let me share my screen right now, change it to the usual one. Okay, I don't need my face to be so big over there. Okay, so this is better now. So today, actually, once again, I think I could finish my live stream in just half an hour, okay? Because it is almost the same thing again, eh? Okay, all right, Ian Tan, then I'll go through like some of the fundamentals, okay, of the market. Okay, so as usual, disclaimer first. Whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Okay. And hello, Gilbert. All right. So as usual, my social media channels, okay, please follow, subscribe if you could, and like them as if you could. Okay. Telegram, YouTube, Twitter, TikTok. Okay, my daughter is talking to me. Where got fast? Not fast, what? She said my song today very fast. Is it very fast today? All right, so I'll post it in the chat box already. Okay, fantastic. All right, so and kickstart this session. So the economic data for this week. Okay. All right, so let me just share the Forex Factory link over there. Okay, so let me go to the Forex Factory this week. Okay, in fact, every day got news, okay, some news over there. The flash manufacturing PMI, that is 945. It was already out already just now. So what was the number? So forecast was 48.6. It was not so good. The actual is 47, but market also is kind of normal. Okay, then flash PMI is also as forecasted about there. So nothing much. Okay, reaction. Then tomorrow there's this consumer confidence. And then on Wednesday, nothing. On Thursday, this is the final GDP quarter on quarter. And then this is the unemployment claim, which I think, okay, might move the market a little bit. Okay, but anyway, okay, so nowadays, as I mentioned previously, right, the market, it is moving from the inflation data to more of the unemployment. Okay, the Fed has actually got a mandate, okay, not only keep price stable, okay, and also to have so-called maximum employability, okay, employment in the country, okay, and of course the 920 there is the Fed power speak, could be market moving as well, and on Friday there's this inflation data excluding the oil, and I think and I forget what it PCE data is exclude energy and I think it's exclude energy, and is it? I forget already. One other thing excluded. Okay, so but PCE is excluding energy and one other thing I forgot already. But anyway, this is more of an inflation data also lah. So all in all, these are the few things that you need to take note of nothing much, right? In fact, okay, it's the same thing again and again. But okay, so yeah, so of course, last week the market moving news was actually the inflation, not inflation, the interest rate cut. Okay, so as expected through the which one, the CME target rate, okay, over there. So no surprises. Okay, the next one is for the 5-day as per the Fed Watch. It was exactly as it cut by 0.5%. Okay, cut by 0.5%. And so it was actually a larger than typical usual cut. Typically, the Fed like increase or decrease will go by 0.25, 0.25, 0.25, 0.25, but it was larger than the typical 0.25. So it was a 0.5. So in a way, it was actually to jumpstart the easing cycle. So just again go through what is the Fed doing, and what does this mean for the economy, and what is the Fed trying to do. Okay, all right, this is more for the macro view of what's happening in the market right now. Of course, since 2022, the inflation was the key event. So since after the pandemic COVID, not after, it's during the pandemic COVID, right? 2022, we are still in the midst of the pandemic. All right, so inflation was very high. All right, so it was 9.1%. So after finally more than 2 years, okay, the inflation, it is now actually down to 2.5 based on the last CPI, August 1, 2.5%. So moving forward, okay, the Fed, it is anticipating that inflation is under control and is moving towards the 2% mark. Okay, so as of now, I think pretty much straightforward. So I think a little bit quiet. So if you understand what I'm trying to say, that the Fed, it is the thing that it is going to go to 2%, which is under control, just type number 2 in the comments right now. Okay. And of course, the unemployment rate, as I mentioned, I think for the past 2 to 3 live stream, that it is something that is creeping up, that is causing the uneasiness on the Fed. Okay, so it is something that they don't know, or something that they know. So it is something that they know. I think they can anticipate what is going to happen. So because the reason why, okay, I believe why most people should know why the unemployment, it is so important, because the Fed, okay, in fact, any of the country cannot afford the unemployment rate to keep going higher, because when unemployment rate, it is going higher, okay, what happens? People lose job, or not? Okay, people lose job, they don't have the money to go and spend all the wants and the needs, okay, and especially the wants. And if, for example, all the goods whatever things are, buy your bags lah, your car lah, whatever things are, okay, all the wants, the things that you want, okay. So if you can't buy what you want, okay, you spend lesser, then all the companies, okay, will make lesser profit, because there's lesser demand because unemployment so lesser demand, then all the companies, those producing all the goods from the companies, will start to lay off people, okay, because lesser demand, they can't produce so much, okay, don't need so many staff, they lay off people. And once they lay off people, more people get unemployed. More people get unemployed means that there's even more people don't have the money to spend things in the economy. Okay, when this is a feedback cycle loop, you just keep increasing, unemployment rate goes up, more people get laid off, and then more people, more or less people money to spend, and all this. I keep looping now. Okay, continue a positive cycle feedback loop. Okay, this is not what they want. All right. So as I mentioned, right, so the Fed actually had a dual mandate. Okay, so in fact, I just checked. In fact, they really has a dual mandate. So if you check that the Fed, okay, just Google Fed dual mandate. All right. So the Fed modern stat mandate, as described in the 1977 Amendment to the Federal Reserve Act, is to promote maximum employment and stable prices. Okay. All right. So this is commonly referred to the dual mandate. How many of you actually now then you know that the Fed actually has this dual? This is what they want to do. So just type DM. This is what they aim to do. They have only 2 goals in mind: to promote maximum employment and to have a stable prices. Of course, within the past 2 years, there isn't any stable prices because of the inflation. Correct? Because of the inflation, right? Inflation, right? So at that point in time, inflation was really, really high. So they have no choice but to hike the interest rate to really kill the inflation faster. So that is done right now. So stable prices, that we are almost there, but right now they are trying to cure this maximum employment. So right now they have this employment issue which is starting to creep up. Okay, so before I go into that, right, just want to share with you some data over there. So this is the chart that I want to show. This is, I think it is over there. Okay, this one. All right, so this is the inflation, okay, the range, the Fed, and the projection. So the blue line over there, it is actually the core PCE. This is essentially the inflation data lah, okay, minus the energy. I think and the food price, or what, I forgot about it. Yeah, energy and the food price. So that's what they want to measure. Okay, the preferred way of measuring inflation rather than the CPI lah, okay. But anyway, this is like the CPI, okay, the inflation. So you can see that, moving forward, okay, they are expecting the inflation rate to go down to about 2%, okay, in 2026. So right now it is about 2.5%. Moving forward, 2025 next year, they're expecting the CPI to go down even lower lah, okay. And then this is the Fed Fund upper target, okay. This is right now. Okay, so right now you can see that it is larger than usual. It is 0.5. Previously, it's like a small step, small step, small step, small step, like that kind of thing. So it is cutting now to 5%. Previously, it was 5.5%. So this is the projection. All right. So this year, they are going to cut until about 4.5% or 4.25%, thereabout. Okay, before the end of the year. And next year, they are targeting to cut additional 1% more. Okay, to about 3% to 3.25%. And then in 2026, they are expecting long-term wise to be at about 3% wise. This is their projection. So no surprises, the Fed has already laid out, okay, what they want to do. Okay, unless something drastic happen, they are going to follow the plan because the market doesn't like surprises. Okay, but it will be priced into the market lah. Okay, whatever the Fed is going to do is very priced in because they already know, the market already know what the Fed is going to do already. Okay, so and and such that let me add in another chart over there. And moving forward, okay, so this is another data to represent the unemployment rate, the inflation, and the Fed fund now. So you can see that GDP growth, they're expecting pretty stable at 2%. Okay, and then unemployment rate, in fact, they do expect the unemployment rate to really go down a lot, but typically, to keep it stable, at least keep it stable, but don't go up higher. Okay, so projection in 2026 2027 about 4.3 to 4.2 lah, right? And then as mentioned, right, the inflation, they expect it to go down to 2% when it is in 2026. Okay, and of course, when the Fed fund, okay, expected in 2026 to go down to about long-term about 3% wise. Okay, clear so fast? Clear so far? So it is about 3%. I just type 3 in the comments. Okay. All right. So so as I mentioned, right, the Fed is shifting from inflation to curing the employment thing. All right. So things to share with you also. Do you know that the last 3 times the Fed cut 0.5% in a single meeting, okay, was the 2020 pandemic? That was the latest one that we knew. Moving back was the 2008 GFC, the global financial crisis, okay, and then in 2001 the tech bubble. All right, and to be really honest, in 2001, okay, I don't really have how do I say? I don't have a recollection of what actually happened. I know there was a tech bubble, but at that point in time, okay, in 1999, 2000, I was just in secondary school, just in JC1, 2001, it is just JC2. So you know my age lah. I'm 41 this year. So even though I know what happened, but I don't really care about the market lah. Okay, because at that point in time, it's just all about studies, dating girls, have fun, correct. So at my age, I don't have recollection. But yeah, so I can't really have a kind of impact on me. Okay, and in for 2008, right? Okay, I just graduated from university. Okay, so I only know that the job market was really bad. Okay, But again, I was not involved in the market yet also. So the year that I really get involved in the market was actually in 2011 only. Okay, so about 13 years in the market. Okay, but 2008, so again, I didn't really go into the stock market and see what the Fed do, what was the reaction. So I have also no recollection. I only know about history. All right. And of course, 2020, I know lah, okay, because of the pandemic, it was the closest to us. So do you realize something or not? Okay, for the past 3 times, right, during this, okay, the Fed is cutting 0.5 because something happened. Something already happened in the market. So they have no choice but to cut the interest rate fast. Okay, so at the time, one shot 0.5 was this 3 timing. Okay, but this time, okay, is a little bit different. Okay, because okay, from what I see, okay, the Fed it is cutting rate because it can. Okay, not because it has to. So the previous 3 times it has to when it cut 0.5 was because of the COVID. No choice. Wow, no, it was getting really bad. Market selling off, everything. Money is not flowing and everything. So they have to cut. Okay. You don't look like your age. So I don't like 41. That's, I think that is a compliment. Okay, I'm a 41. Okay, well, it can be a little bit scary. Like thinking a little bit more years, like tomorrow, next year 42 already. Then you're like, wow, going to be 50 years old soon already. Okay, all right, and then yeah, so it not because it has to. So yeah, so right now, all right, it is not a reaction to recessionary. So the market it is not heading into a recession yet. It seems like people are talking about recession, but the market no recession yet. So it's a preemptive. So it's like a prevention. Okay, there was a unexpected slowdown in employment rate. They know it, but it is not so bad right now. So they want to, in a way, that preemptive prevention, okay, is better than cure. So they cut it this time round. Clear? All right. Understand what I'm trying to say? Right now, the Fed is cutting rate because it can, not because it has to. Clear so far? If understand, just type yes in the comments. Just type Y like the third Y. So in a way, okay, possible there could be a soft landing. Soft landing means that it is working out. Okay, the marketing that as in eventually there won't be a recession and such lah. Okay, but again, of course, people talk about all the U curve is going to has already uninverted. Okay, all right. So based on the past historical data and all this, okay, there could be a recession and such. Okay, but again, as I mentioned previously, be it in the stock market and such, right? Too many times when people are looking at the same thing, everybody is looking at the same thing. Okay, more often than not. Okay, that event tends not to happen. Okay, do you remember? Like I think is it 2 weeks ago? I asked, right, how many of you here are bullish or bearish about the market? And everybody is bearish, right? Then the market just reverse, just go up higher. So this time I think it is a bit similar also. Everybody is like expecting a recession. Everybody is like looking at the U curve, okay, the 10-year minus 2-year or 10 years minus or 2-year minus 3 month, that kind of thing now, okay, the U curve differential and all this, okay, but everybody's doing the same thing. And it seems like market is like pricing in what can happen, and the Fed know that as well and trying to cut it off also. So it's like, in a way, my view is that the opposite could happen. Okay, the recession might not happen because everybody is looking at the same thing, and of course, the Fed is doing something right now and cutting rate because it can, not because it has to. Okay, and maybe there could be a soft landing. Okay, I don't know. I don't know about you. Okay, how many of you here there could be a soft landing? If you think that there is a soft landing, just type okay. Letter Y again. Yes, I think previously I saw a lot of you. Y, thank you so much. Okay, if you think that there is no soft landing, okay, you just type no. Okay, yes or no. I just want to have a sense lah. Okay, but again, nobody knows whether there will be a recession or not because it is just like I don't know. It's just like earthquake. Okay, we know it is there. That it could happen, but we can't precisely tell you when the recession will happen. And by the time the Fed tells you that the recession is going to happen and it's too late already. Most likely or not, the market has started to come down already. Okay, nobody can predict, accurately that there will be confirmed recession. No economists can do that. Okay, all right. So a lot of people think that there's a soft landing. Okay, the rest no response. Anyway, okay. as I mentioned previously also in different data also, Fed easing is actually positive for stock, at least for the short term. Short term why? Short term. If there, especially and if there's no recession. Okay. So this is another one I'm going to share with you over there. This one. Okay. So you can see that S&P return for the next 18 months, that is 1.5 years following the first Fed rate cut. Average of all, you can see that the blue line, it is about 8.5%. Okay. And if there is a insurance cut, meaning that, they just cut because they can cut, not because they has to cut. Okay. All right. It went up quite a bit, about 30%. But if there's because of the recession cut, they have no choice not to cut it, right? Then the S&P return tends to have a negative return. So if, okay, the market is not going into a recession, okay, preventive cut, okay, then it is based on historical data, it tends to be positive for the stock market, okay. But again, some of the data is contradicting, based on the previous Fed fund. Once they start to cut, a lot of times the market tends to go down. But the kind of correction or crash is typically short-lived, unless there is really a recession that's coming up. So it really depends whether there's a recession, of course, but nobody knows. At the end of the day, okay, it is nobody knows. Okay, so do you realize that at the end of the day, I talk so much, I talk so much, I talk so much. Okay, inflation, all this unemployment rate. So the backdrop, what is going to happen? What's the meaning of that? Fed has a dual mandate. All this you have some knowledge. Have some knowledge. Okay. Okay, you feel smarter. Maybe if you don't know about the market, you feel smarter. Oh, the last 3 times the Fed cut is this thing. Now it's inflation to employment rate. Has a dual mandate. Now the Fed is cutting because it can, because it had to. So, you seem to feel smarter, correct or not? Do you feel smarter? If you feel smarter, just type letter S in the comments, or you still feel very stupid. I'm going to lead to something. Okay, just answer me first. Do you feel smarter right now? And of course, plus the data and all this. 18 months, it tends to go up higher and such. Okay, all right. While I'm saying C-based smart, okay. But the issue is, okay, it's just like you go to some of these, analyst talk and all this stuff. They show you all the mumbo jumbo and all this stuff, okay. But the end of the thing, okay, it is still the same thing, okay. So it's can buy or cannot, can or cannot. Correct or not? At the end of the day, what is the actionable idea? Can buy or cannot? Okay, can or not? That is the main question, right? So you feel smarter, but at the end of the day, if you leave the room, like, okay, so what am I to do about the market right now? You can't really tell you to buy or cannot buy right now, right? No idea, right? Okay. So do you mean that the market is going to be bullish? For me personally, okay, I think, okay, at least until the end of the year, the market is going to be bullish. That is my personal view, okay? Because I'm more of a relatively shorter term trader. Short term as in not intraday, in out, that kind of thing. But more of a swing trading, holding for a few days to at most 1 month, that kind of thing. So holding until end of the year, I think it is still bullish. But 2025, moving onwards, okay, I don't have a crystal ball already. So we have to see day by day what is the market going to do. But I think at least for now, until the first quarter of 2025, I still think it is okay. Okay. But at the end of the day, talk so much, make you feel smarter, you have no actionable idea what to do about the market right now. Okay. So this is where I am coming in. Okay. So you can see that I go into the chart right now. So all these are previously is just tell you macro what it's going to do. But at the end of the day, it is all about what is happening right now in the chart. Can buy or cannot buy. So I'm going to tell you outright, okay, summary, okay, in case you have no time right now, you want to leave soon. Summary is, I think the market still bullish until the end of the year, but at this moment in time, the market, it is a bit overextended, overbought, okay, because of the market breadth is also at a high already, okay. It doesn't mean that the market is going to go down, okay, but okay, the reward to risk ratio, it is not really there. Okay, this is the gist of what I'm gonna go through later, okay, or right now, okay. So moving to the S&P cash index right now, okay, the uh the zero gamma level, it is at 5650, the zero gamma level, okay. So this is the Melvin said can talk about HSI later. You and HSI again. After all, you make coffee already, then HSI already. Okay. Okay, I'll go through that later. Okay, Melvin. So the gamma level. So this is from spot gamma. Can see that based on here, the zero gamma level, okay, it is at about 5650, there about 5650. So which means that if price can stay above 5650, then the market, it is good, okay. Less volatility, lesser chance of sell off. So if the market really does go down below 5650, then there's a possibility that the market might switch mode, okay, to a correction mode and also higher volatility in the days and in the weeks to come. Okay, 5650. So if you add in the usual, the indicator over there, okay, my central pivot range over there, okay, all in all, overall the market, it is still in an uptrend, okay, but as I mentioned, 5650 is one level that you might need to take note of. The first level, it should not close below 5650, okay. Of course, it also coincides with the previous, resistance level. So now previously was the resistance level there. Now cleared already, it tends to find a support. So somewhere around there also. Okay. And why I say that the market breadth is a bit high, okay, nothing new also. This is from the DP gallery over there. I posted in the link over there. So as for those who are new, it can tells you the trend, condition, breadth, and sentiment and such. So from here, you can see that the stocks above their 20-day, 50-day, and 200-day EMA. Okay, EMA or SMA doesn't matter so much. It's pretty much the same. So basically, it is telling you beneath the surface what are the rest of the stocks doing, because the S&P, the top few stocks like Tesla, Microsoft, Google, and Nvidia, and all this, they carry a lot of weight in the indices. So what are the rest of the 480 stocks doing out there in the market? You can see that the S&P stocks above 20 EMA, short-term wise, the breadth, we are nearing also at the high already. Let me try to zoom in, then you guys can see clearer. Can see clearer, right? Okay, so you can see that right now it's about 75%, which means that 75% of the stocks in S&P 500 are above the 20-day EMA. So it is relatively at a high. Definitely not at the lower. Low is there's somewhere around here, but it is somewhere around at a high already. So percentage of stocks above the 50-day MA, it is about 80%. Okay, so most of the stocks are above the 50 EMA. Above the 200 MA, it is also about 80%. So all in all, you can see that market is confirmed in a bullish sentiment, but the market breadth is a little bit stretching to the high side, okay, at about 80%. So you can see previously, when the breadth, it is at a high side, especially if both the 20 and the 50, it is relatively at the top over there. So let me just try to click onto the chart, okay, and then you can see clearer. So okay, so you can see the crosshair, okay, especially when it is both at top, okay, somewhere around here, okay, can see over there. All right, since 2022, can see there's a correction, and after that, over here, go up, there's a correction over there, okay, and then you can see over there at the top over here, when it is somewhere at the top, both the 20 and 50 is at the top, there's also a correction. When it's at the top over there, it is at a correction. There's a nicely corrected over here, and then back to a top again, okay, is at the top, okay, there is some slight correction. Of course, market is generally in a bullish trade, so we do not expect to be like a sell-off and such. Okay, we never know, but typically there should have some reaction, market should have some correction. Also, when it's at a high over there, okay, at a high over there, okay, there is a correction also. So at a high over there, at a high over there, okay, there is also a correction. So right now, we are also at not at the absolute high, but at a relative high. Also, which means that can the market continue to go higher? Can go higher or not? Can go higher, but your reward to risk ratio, it is actually not in your favor. Okay, you are like entering right now, you are risking a lot, okay, to make just that little bit, okay, to the upside only. Okay, understand so far? Can understand so far? Okay, just type yes, letter Y in the comments. Can? Okay, and the S&P, if I am not mistaken, okay, I think there is a star reversal signal coming out soon already. I think by tonight, okay, or tomorrow, the I think I forgot, but should be, yeah, S&P is coming out. I think either it's Nasdaq or Russell 2000 is coming out. So you can see that Russell 2000 is starting to come down also already. Okay, and you can see that for today, the overall underneath the surface, okay, the equal weight S&P, it is down right now. So which means that out of the 500 stocks right now, today is like not so good lah. Okay, underneath the surface, the RSP is down a little bit. But all in all, the market hasn't really corrected right now. I'm just saying right now that at this point in time, okay, you know, the reward to risk ratio, it is not in your favor. Okay, can? All right, so this is the indices part, and then I mentioned already. So I want to share with you previously. Previously, how many of you here actually traded commodity sugar? So last week I talked about oil and gas, energy sector, DBC, right? How many of you actually trade DBC or sugar? Anybody or not? Okay, we continue to go higher. Oil and gas, my energy sector, okay. I know the seasonal advantage insiders. Many of you guys traded the oil, like for example, Melvin and all these traded the oil. Some of you traded the energy sector and energy stocks. Okay, so you can see from the member success area over there. This is the seasonal advantage over there. So you can see the member success. Okay, did I show you guys last week? Okay, just stretching from the top over there. You know, like this. Okay, for me personally, I also exited some of the stocks. Okay, Emily, you know, exited Fang. This is the Diamondback Energy. Chai Sing also traded Diamondback. Okay, Mary traded Fang, MPC Energy Sector. Okay, XLE. Okay, BW traded XLE Energy Sector. These are my seasonal advantage insiders. Okay, and for me personally, I exited Fang with a 1R profit. Okay, Richard traded. This is a sell short on EFX. Okay. So SS also traded this is sell short on IBM. Okay, this is another stock. Okay, so this is CDR Energy by John. Okay, and then this is even some of my members they are using the seasonal data to trade options. Like for example, Xian Hui is using that to trade the DTE options. So basically, what he traded CHTR. Okay, so DTE. Okay, and then Modrin is also using the SDI data. Okay, to buy call. Okay, or I think this is spot one. Okay, on WFC also going up. So all these are using, if you know what to do, okay, you can use the seasonal data to trade different things. So as I mentioned, okay, SDI, the seasonal data, okay, the seasonality is the closest thing, okay, to a crystal ball. Okay, so like I think it is I think is it okay, so over there I can see that. Anyway, really recommend my pals to subscribe your SVI crystal ball. So I always say it is the closest thing to having a crystal ball. I'm not God, so I don't have a crystal ball. This is the closest thing. Okay, so for example, personally, I just share with you. Okay, so this was last week I mentioned, right? So this was the members area. So last week, last week on the this week, like mentioned, this week I already updated what I'm watching for this week. So last week, for example, I just did a members only webinar on 19. So for those who just watch, remember to watch the webinar. I shared with you guys the another market breadth indicator only for you guys. Okay, so do check it out. Okay, and then the 16. Can I see over there? Can I say this is a summary now? So can you see that previously I no hindsight. If I lose means I lose. If I win means I win. You can see that over there. Diamondback, MPC, CVR, okay, and also corn. Corn is still doing okay, okay, but that's top up, but that's fine, okay. All the previous 2 or 3, they are doing really, really well. So you can see that CVR, okay, when I first mentioned CVR, it was like that, okay, CVR, CVI. The company name is called CVR, but the ticker name is called CVI, okay, it's a bit weird. CVR. CVI, sorry. CVI, okay, you can see over there. All right, when I first mentioned, it was just somewhere around here, okay? So it just went up. Today have a correction, okay? But all in all, okay, the swing up, it is, we have done that already. So we captured the move, we want the swing up, it is there, okay? And last week, okay, I mentioned about sugar, okay, but I did not talk about, I did not enter into sugar, okay? But, okay, it was also like, wow, nice trade, but I missed it. Okay, can sugar? See, I said 24th September to 8th of October that it was starting to move. How many of you can remember or not? You can remember, just type letter S in comments. You might not have traded, but you remember I talked about sugar. Okay, you can go and check it out. What happened to sugar? Go check it out what happened to sugar. You can see that these are sugar futures. Okay, wow, it just went up all the way. Okay, when I first mentioned it was on Monday it's here. On Monday it is here. On Monday, it is here. Okay, after that, go up all the way. So it went up, wow, about 20% in just how many days? 1, 2, 3, 4, 5 days. 20% in 5 days. Now, if you remember, anyway, yeah, at the end of the day is whether you take action or not. Okay, so for me personally, I did not buy into sugar. Okay, this is not the commonly one that I traded. Okay, but nevertheless, do you agree that seasonal data, it is like the closest thing to having a crystal ball? Do I really know that sugar is going to move up? I don't know, but at least it tells me that, hey, maybe if we are really want to trade commodities, you want to look into sugar and such, can trade this. So at least I know what to look into. Do you agree with me or not? Okay, and nobody remember sugar. So really, none of you traded sugar. You all just eat sugar, drink coffee, siu dai or with sugar. Anyway, so this coming week, okay, what do you all think is my trade idea? Okay, dollar index is still holding well. Okay, what do you all think? Any idea what do you think that I'm going to talk about now? Okay, but anyway, just to share with you, it is actually the grains. Okay, it is still all about the corn, soy, and all this. So it is still about the grains. Okay, so if you actually take a look at the wheat, okay, it is like not too bad. Okay, it is still going higher. Okay, I won't show you the exact date okay, but soy, it is doing not too bad. Corn, okay, I guess stop up because my stop was too tight, but today it seems okay again. So all in all, I'm just trying to tell you that the wheat, soy, corn, all these soft commodity, the grains are doing not too bad this period. Okay, some of this data, it is not inside the SVI. It is because I don't have the data for the ETF for the soy and wheat, so it doesn't show. But if you know what you want to look for, okay, in fact, you can actually go to the equity clock and check it out yourself. So that is provided you know what you want to look for. You know what you want to see. Okay, so for example, for wheat, okay, can you see that? Typically, okay, at the end of September, mid of September to at the end, which is somewhere around here right now, it tends to go higher until maybe mid of October. So right now, the trade idea I'm going to share with you, it is actually this. So whether you want to trade or not, it is up to you. This is not an advice to trade. I'm just sharing with you the past historical data, the seasonal data. Okay, whether it's going to go higher, I don't know. Okay, you 看着办. Okay, this is just some ideas that to share with you guys. Okay, can all right. So for me, I think personally, wheat and corn actually all this look not too bad. So in case you want to trade wheat, okay, most of you guys wouldn't trade the wheat futures directly. Okay, so the another proxy is to trade wheat CFD. Okay, another proxy to trade, it is this WEAT. Okay, the Fulcrum Wheat Fund ETF. ETB is a fund. So this is under the PTP list, but this is excluded. It is tax exemption. Sorry, yeah, it is although under PTP list, but it is tax exempted, so you don't have to pay tax on this. Okay, this is wheat. So this is the proxy, the ETF for wheat, WEAT. It is that. Okay, all right. So this is wheat. For soybean, okay, of course the proxy is to trade the soy CFD if your provider, CFD provider, does have it. Okay, if you don't have it, if you want to trade soy, then the proxy, it is the soybean ETF. That is soybean, SOYB. Okay, SOYB over there. All right, so this is the soybean. So it's all under the same fund, under Fulcrum. So they do this commodity ETF for you guys. Clear so far? Clear so far? Just type letter Y. Yes. Can? So this is a trade idea for this coming week. I'm looking at that. All right. And then for Melvin, you can ask about the Hang Seng. Hang Seng, it is this. Very bullish. It's quite bullish. But again, there is a star reversal signal already for Hong Kong market. So I'm not saying that it is going to crash again. I'm just saying that right now, the reward to risk ratio, it is not in your favor. Okay. So yeah, it is in a way, it is above the CPR, above the cloud. It is bullish. Okay, not too bad. Okay. But right now, not the best optimal time to enter. TP, yes, can TP. Have you entered already? If you have entered, short-term wise, okay, swing trade, you can TP. I think it's a good time to TP. So do you enter into HSI or not? Okay, but if you're talking about long-term wise, mid-term wise, within the next few months or so, okay, I think it can continue to go higher. Okay, how high can go, I don't know. Of course, the nearest term, it is at about 19,500 level, thereabout. Okay, but short term wise, I think it's a good time to exit. Short term. Okay, swing trade, I think it's a good time to exit. Okay, from here, don't buy, here don't buy, and here then you buy a bit TMP, right? Right? So your reward to risk ratio, it is not there anymore. Okay, wow, Melvin very soon. When drop, I buy again. All right. Okay, I think that's about all I want to cover for today. So all in all, I say that the market breadth, it is a bit at the high side. So as of now, the market is still holding on to the market, is still holding on at the high side. Haven't really come down yet, but I think for me personally, I won't be so eagerly to go long. The reward to risk ratio is not there. Okay, and for the trade ideas, I'm looking at the soft commodities. Okay, soft commodities right now. Okay, any questions so far? Any questions so far? If I have a question, okay, just nice, about 45 minutes, okay, less than an hour. Any question, I can answer a few questions before we end the session today. So previously, I talked about all the fundamentals, the macro view. So all these are like make you feel smarter, but it doesn't make you have a great actionable idea how to do. Okay, Terrence, how to enter wheat? You buy the ETF, You mean that exactly how you want to enter into a trigger, is it? Okay. By the way, are you a SBI seasonal vantage insiders or not? Okay. If you are inside SBI, I actually shared with my members how to actually enter into all the particular stocks, ETF. Okay. In fact, it is actually watch and rinse trigger. So if you watch any of our how to say, the events, okay, you might have actually Bini talk about the watch and rinse. So I adopted from there. So it's a no secret, I adopted from there. So based on that, I teach my members how to enter is like the recent webinar. So I share quite in detail how I enter, how I exit, where to put the stop loss level and such. Okay, so I can't tell you how to trigger lah. Okay, this is not the main scope of the idea. Okay, all right, of the session, but you know, the trade ideas is there. I cannot take you into like, oh, I'll tell you when to enter and such. This is not a copy signal service. Okay, I can tell you only know where to look at. So if you want more in-depth thing, you might want to consider my seasonal vantage insiders. I don't know. Actually, I kept talking about SVI lah, so I don't know whether you are inside already. Okay, as in you're not inside lah, but if you are keen, okay, drop me an email, then I can give you a coupon code. Okay, as of now. So as of now, I won't be doing any other webinar on SVI, so there won't be any coupon code lah. Okay. Any other question? Any other question so far? Today the small cap, it is not doing so well. It is not doing so well. It's coming down. Okay. All right. Any other questions so far? No question. If you have no question, at least give me a like, share, comment. If you find value in today's session, okay, just type value in the comments. Okay, and also give me a like, share, and comment. If you're watching this on YouTube, okay, do subscribe to our YouTube channel as well. Where will HSI support roughly be? HSI support. HSI support over there. Then this one. This one. Which is where? I need to add in manually. Okay, yeah. This is the pivot. It is not showing in the template. It is in the, see whether it's at the S1 level support. Let me see whether I can show it here. The pivot point. Okay, it is somewhere around the yearly pivot. Can you see that the yearly pivot? Yeah. Okay, the yearly pivot at the black dot level there, it is about 17,800. If pullback, I think price can go there. Again, it doesn't mean that price will go there, but you know, a logical support area will be at the CPR level, the monthly and the yearly CPR level over there. 17,800. Okay. Week going into the Ichimoku cloud. Week as in the futures. I'll talk about the futures. Let me go into the usual 1 day time frame. Personally, I love to use the 2 day time frame cloud, but I know some of you guys do not have the 2 day time frame. So typically, I just show the daily time frame cloud. Week is going into. It is okay. Lady, week is going to the issue. That's perfectly right. Before it can become an uptrend, it has to go above the cloud. Before it go above the cloud, it has to be inside the cloud. But the key thing is, okay, we have a few factors in mind. First of all, seasonal trend, it is with us. Again, it doesn't mean that because of the seasonal trend, it is somewhere around here, that it has to go up. No, as I mentioned, seasonal, it is not a 报价, okay? It is not 100% guarantee, but it does tells us where to zoom in, where should we focus our effort on, okay? Secondly, okay, first thing before the market, before the asset class, the stock ETF can go into uptrend, it has to stay above the CPR level first. In a downtrend, it is definitely below the CPR one. So before it transit, okay, from a downtrend to an uptrend, it has to go through this stage where it go above the CPR. Because right now, price is above the CPR right now, for at least for the week futures. So it is okay. All right. About CFD, could you please explain a bit? I think Lily, most likely you are a pretty new trader. So CFD means you don't actually, like buy into the stock. You don't hold the stock. You are not the shareholder of the stock. You are not interested in being holding the stock or ETF. You just want to trade the price difference. So there are a few regulated CFD broker in Singapore. There are a few, okay, like Philip, IG plus 500 and such. So they allows you to trade the market, for example, but without holding the stock or the ETF or the asset classes. Okay. And when you're referring to soft commodity, do you mean that there may be opportunity to go? Yes, LW. I say that there could be some opportunity to go long, but as I mentioned, it doesn't mean that I say already you go out like that lah. Okay, I'm just telling you where you could be looking at. You decide where you want to go. As I mentioned, this is not an advice to trade. I'm just sharing with you what is happening right now. I'm looking at commodities. Okay, soft commodity. Okay. How about China A shares CSI 300? Do you have the ticker or not? Okay. If I go to the indices, hey, how come it changes right now? Open this. Okay, yeah, change a little bit. So the indices, okay, I have the Shenzhen Composite Index. So the Chinese market right now, okay, it is still in a bearish downtrend. The Shanghai Composite Index, it is still in a bearish downtrend. So of course, the Hong Kong market, it is stronger. The Chinese market, not so strong right now. So I don't trade the Chinese market and I don't hold Chinese stock. So I can't give you much insights, but based on the indices itself, the Shanghai and the Shenzhen index, right, not the best time to enter. Okay, all right, it could have a rebound, but again, I'm not looking at that for now. Okay. Alex, as a non-stock market, I cannot give you an answer because I am not so into property. Okay, I not so into property. If you want to refinance, and all this. Okay, of course the interest rate is coming down now. You want to refinance and such. Maybe you could but again, I am not a property expert so better to ask me. I'm not a property expert. Okay, property expert, ask other people. Okay, Ken, other questions so far or not? If not, okay, once again, thank you so much. Okay, got question. Seasonally, second half of September should be coming down, but till now it is still elevated. Okay, yeah. So, okay, since I'm here, might as well just share with you this chart over there. Did I show? I in fact wanted to show the insiders today, but I forget to show. Let me just show you here. Okay, so this is the seasonal chart, okay, in election year. So you can see that, in fact, right now, it is moving in tandem with the seasonal. Okay, you can see that at the start of September, when I first mentioned, it really does go down. You can see that the S&P, okay, in September, really does go down in early September. Okay, by right, as what GPT say, right, second half should be coming down. Again, this is just a guideline. So again, don't treat seasonal like baojia, like God level way of doing things. It doesn't mean like that. So for example, I think in May, by right in May it should come down, but it didn't. So it just continued to go up all the way also. So it's just a roadmap, a guideline for you. But again, it comes down. It doesn't mean that it has to come down. Again, the market can just stay put like that. It can stay put. But if it can stay put like that, right, it already means that the S&P is already having a correction. So correction, there are two kinds. One is correction through time, okay, where price really does come down, okay, or correction through price, correction through price, where the market really does come down in price, or correction through time, okay, the market really doesn't go down, okay, the demand is still strong, but it corrects through time. So there's a consolidation before it can go high. So if the market really does consolidate, to me, right, the seasonal still work. Okay, it really tells me that the market does have a correction, just that it doesn't really go down a lot. Okay, can so much. So by right, based on the seasonal trend for election year, it tends to go down until in October. But again, nobody know whether this will pan out. Okay, so don't treat it like God mode. So it's not 100% 保价. So we still have to see the price action, okay, the market breadth, the seasonal, whatever things you know about technical analysis, you have to put in all together, and the sentiment as well. Cannot just follow the seasonal trend just alone. Okay, can? All right. So with that, I think I answered most question already. So once again, if you find value, give me a like, share, or comments. Okay, if you really type value already, you don't have to retype again. So once again, if you find value, okay, just type letter V in the comments. Give me a like, share, and comments if you could. Okay. All right. With that, thank you so much. I really appreciate that you are staying with me until now. So with that, thank you so much, and I will see you guys again next week. All right. Thanks and bye bye.